Welcome, everyone, to another edition of the Tony Sirianni podcast. I am thrilled to have my friend John Roberts with us today. John Roberts is the Chief Field Officer for Northwestern. Thanks for being here, John.
Tony, thanks for having me. Looking forward to our conversation today.
Yeah, me too. So it starts off, with kind of the basic thing. We were just chit-chatting about the general agents, and you were having dinner with those guys, and I don't think people even understand how much insurance agent, especially a blue chip insurance firm like yours, really embraces some of the tenets of the independent movement and what that's, been to our industry and all, how it actually functions really like it's these guys are growing their own businesses out there. I mean, it's a very entrepreneurial sort of way to look at things.
Yeah. I think that move to independence broadly in retail
Yeah.
wealth management and financial planning has been fantastic. It's been the right move for the advisors. It's been the right move to attract more people into our industry, and I think the right thing for the clients. I think they're better served having an advisor who is kind of owner operating their firm. It's just our view, and we've been in the business at Northwestern Mutual for 170 years of growing independent advisors who are running their own business with the
So
backing of what is
so now
now, a big company.
does a little party just want to say, "Hey, where you guys been? We've
Yeah,
been
well,
we've been doing
well,
this a
I
while,
wouldn't say that. We're relatively new to the wealth management space. It's been a dynamic that's worked well for us in the insurance space,
Yeah, yeah.
right? And now we're finding, geez, in the last couple of decades, we really been leaning in more into wealth management. It works as well, if not even better, in that space too.
Well, I think so. That's what's interesting to me because it really is, culturally, there's an alignment, right? With
Yeah.
advisors. So if I'm looking to leave a big wirehouse or something, and I'm looking for that independent sort of ethos, right? I want all those cultural, pieces, and then the benefit of also maybe having an actual balance sheet and some scale. Well, that you should be thinking about Northwestern a little bit.
We're trying to walk that tightrope, right? And it's a tough thing to do. The mix of independence, control, and a degree of freedom with the backing of a large company right behind you. And there's trade-offs in every model, but
Of
we're
course.
trying to find the best of both worlds.
Well, it's also interesting to me because, one of the things I think that our industry, I mean, the wealth management industry in general, has traded off. And I don't know that it's been a really good trade for most of ours, is we got out of the insurance business, that's at some point. So when
Yeah.
I started, 100 years ago at Merrill Lynch, there was a guy who walked around the office, carrying, but he was an insurance guy. And we were really encouraged to do it. We did a lot of insurance. We looked at the other side of the balance sheet, and I thought that was great. I don't know how you do estate planning without it, right? So we
Yeah.
we 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 did we really worked with insurance. Then, one day it was just banking products, no longer doing insurance. I mean, it's something that's missing.
Yeah, we certainly would agree with you, Tony. I mean, you look at insurance ownership rates in our country, they're lower than they were 10, 20, 30, 40 years ago. They're moving in the wrong direction. Our studies on the insurance side of our business say that there are probably in the neighborhood of 100 million Americans who don't have any life insurance or maybe only have the group insurance from an employer. And
Right.
I think you're right on that it's kind of left our ethos a little bit. We want to do all the great work of helping people plan for what's possible, but you certainly have to protect first against what could get in the way and use that as a foundation for the plan.
Well, yeah, I think insurance is hard to sell. You know what I
Yeah.
mean?
Yeah, for
It's
sure.
not so easy as, hey, get into this, you can make some money. This is like you got to spend this money to protect yourself. And so I think whatever reason, advisors got away from it, but why give up that piece of your book, or why have somebody else, working with your client when you could do it? They trust you already.
Yeah. In some ways, I hate to say it this way, Northwestern Mutual is a good case study for that for the rest of the industry. I mean, we weren't in the wealth management
Right.
business, right? 25 years ago, we had essentially zero AUM. We have a little over 400 billion today, and we were able to gather all those assets because we were the other advisor at the table. We were the insurance advisor that had this relationship and was doing some of the deep planning on that side of the business, and we were able to gather the assets because we already
Of
had
course,
these
well, see,
established. It's the risk for the rest of the industry, right? That they're
it
the
sure
other
is.
advisor at the table.
Yeah, yeah. I mean, look, the two things that motivate advisors are fear and greed, right? So
Well,
they should be terrified that they're not somebody else is talking to their clients.
yeah,
And look, they're scared for the right reasons, which is they want to take care of their clients. They want to be the trusted voice, right? You want to be the person that can help them make those decisions. So look,
yeah,
the other thing they're doing, John, is you see a lot of Advisor Plus in my mind is the future. So it's Advisor Plus insurance. That's an obvious one. Advisor Plus tax, Advisor Plus
yeah,
CPA, those sort of things.
yeah.
It's part of what's going to happen.
Yeah.
Sure.
It was certainly worth thinking about that as an industry in the higher net worth and affluent spaces, but you're seeing it and writing about this all the time, Tony. I mean, those services are coming down market, and the mass affluent market is now expecting the advisor plus those services. So how do we create those services in a cost-effective way that we can scale
Yeah.
across larger books of business?
Yeah. And I mean, one of the things you guys have hit upon is, and the firm's well known for is planning,
Yeah.
so talk a little bit about how you guys, structure it or what advisors can expect when they come in, and want
Yeah.
to want to do some planning.
Yeah. We really frame our differentiation or our go-to-market approach is the combination of, this trusted advisor, human advisor we think is irreplaceable. Uh, Leading products on certainly on the insurance side. I think we've got, there's I don't say complete commoditization, but kind of equivalent, a lot of equivalence on the investment side in terms of product offering. And then planning. So how do you tie together all the products and those um, insurance and investment products together? Our approach is through a proprietary planning tool that we built and launched probably now maybe 5, 6 years ago that we continue to refine. We used one of the industry standard
Yeah.
tools for a long time, and we found is that tool is it was serving us well, but it was changing hands, different owners, generally financial owners or private equity owners, and those owners weren't necessarily investing in the tools or capabilities we were looking for, kind of particularly on the risk side of the business or insured side of the business. So we decided let's build something that we can control, we can refine, we can adapt as we need to,
Yeah.
and we can integrate. So this planning tool has kind of become the central hub for our advisors that integrates our wealth proposal system and tool. It integrates illustrations on the risk side of the business, kind of in a one-stop shop. And now because we own this own tool, we're able to integrate with the rest of our tech stack. So our our AI capabilities that can listen in on the advisor client conversations can help fill out that tool
Yeah.
in the
Yeah.
background while you're having the meeting. Something we weren't sure we'd be able to do, frankly, if we had a third party vended solution.
Well, I do want to talk about it, get to AI as well. One of
Yeah,
the things I found, and I meet Northwestern reps out there, very sophisticated guys, all literally
yeah,
worried about the same. I think they're indistinguishable from the wire advisors that I meet in terms of if you didn't know where they were from.
mm,
Because they're talking about the same things, the same challenges, with their clients. And one of the big challenges that they have, and I think one of the issues that there is in the independent world, even though the collective cultural stuff is great, succession is an issue. So, you're
yeah.
sort of hitting on that a little bit, with the firm size and scale. But I mean, your guys have those same problems, right? But you have solutions on some.
Yeah, yeah. So I think we're facing a lot of the same challenges the industry is facing in terms of the transition of equity from one generation to another. Now we have a little bit of an advantage in that our advisor field force is a little younger. Our average age across all of our advisors is 39. I
Wow.
don't know, Tony, what your
No,
industry
that
stat
that's a
is.
lot. That's a lot younger.
So it's not 20 years younger, but say let's call it 15 plus years younger than the industry on average. So we see ourselves kind of in a position to be, in some cases, the acquirer or the succession partner.
Yeah.
And because we continue to fuel our field force with more young talent, we recruit new advisors that average 28 to 30 years old. We're pumping in more potential successors into this
But
ecosystem
that
every year. So feeding it with more potential buyers.
Yeah, that's incredibly. I think that's important from an industry standpoint because it used to be Merrill Lynch had the great trade. Everybody went there.
Hmm.
They don't have a training program anymore.
Yeah,
And I,
yeah,
I hope I don't say this in every podcast, but I always would say that the best job in the world you can have is fail out of the Merrill Lynch training program because then you're licensed, you're sales trained, you've got
sure.
clients, and everybody wants to talk to you, and you're of value. And but today it's just not there. People aren't having the scale. It's very hard in the independent
Yeah,
world. Everyone's doing it ad hoc. You get some support from a firm usually, or not. It depends on the scale. But this is one of the real advantages in my
yeah.
mind that you have because when we talked, it's hard to sell insurance, but you're training guys to sort of understand what's going on in the industry. So these are high quality junior partners that you're bringing in. And how many of them do you bring in a year, do you think?
We'll bring in this year 3,400 or so. So it's 3,000 to 3,400. They'll all go through our national training program. They'll get licensed and ready to go. Now, admittedly, like much of the rest of the industry, in 5 years, we won't have all 3,400 here. About
The way that
10,
works.
10% of those advisors to 15% of those advisors will still be here in a full-time advisor capacity where they own the business that they're running. Another 10 to 15% will be here as a team member. So they've kind of fed into one of the existing large teams within our ecosystem.
Well, that's incredible. Equitable does it. There are a few firms that are
Yeah,
doing it,
yeah.
that have sort of these large benches, but that's a tremendous advantage that the firm has. And now that's something if you're going out there trying to recruit in the larger world,
Yeah.
whether it's wire advisors or anybody else, you got to be talking about that because that's
Yeah, for sure. And not to say we're the only ones doing it. You're right. I think there are others that are seeking to grow
but
talent
not
organically,
not
but
as
we
many,
see,
John. Not as
yeah,
many as there used to be. There just aren't as many.
yeah. I think, look, I think that's a problem for our industry, right? We've all seen all the studies and reports, the McKinsey paper from earlier this year that in 10 years it's going to be what is 100,000
Yeah.
advisor shortage in this country. We have to do a better job of growing the talent in our industry and frankly working to get younger talent
Yeah.
into retail financial services. We're trying to do our part, but like you said, we certainly see that as a role we can play for society, right? We think
Yeah.
it's advantageous for us to have younger advisors as the industry ages, and it is a part of the value proposition that we pitch to our veteran, large-scaled teams. That hey, listen, you can come here, run your business, and we'll help you find, onboard, vet, and place talent onto your team.
It's just so hard for them for an individual RIA or
Yeah.
someone coming out of a wire to source and then even to have a structure that works for younger people. I mean, I'm not trying to beat up other generations, right? But it's always hard. But this generation seems somehow there's like an extra step to take, and people need to know how to deal with it.
Right. Right. Yeah.
You guys
Well, and
done that.
I imagine if you're bringing in one or two 30-year-olds a year,
Yeah.
um, you may have great training, you may have a great ability to connect with those people, but they're going to be sort of on an island.
Yeah.
Um, and it's going to be a little harder for them to build up their skill set with
Hey, that's so
contemporaries
so
in
so
the
true.
industry.
When we started, we sometimes you get nostalgic about things that you hated at the time, like, cold calling and stuff. But
Yeah.
but at least it was, if you could master that little bit of a skill and you worked hard, it was going to eventually work. Today, you can't do that. So you need a different pathway for young people.
Yeah. Well, we like to put them in our green acres as a group, let them learn, grow, kind of certainly have the mentorship and
Yeah.
support from our veteran teams and advisors, but show them that there are others going through the same sort of difficult gauntlet that has proven for a long time to be the fire that creates a successful advisor.
That's right. And there's something to be said about a bullpen and the interaction
Yeah.
and working with this is an apprentice business. It's very hard to not be an apprentice business. You've got to
Yeah.
learn by seeing other people do it. You've got to see examples of successful people and say, well, this is what I want to be like,
Yeah.
as you go
Yeah.
through.
And we have some team. Look, I don't mean to say we have some teams that are fantastic at bringing in talent and developing talent, but I think that's probably more the exception than the norm, even for us, frankly.
Yeah, yeah, yeah. So well, I think that that's a great thing to do, for the industry, and that sort of checks off, some boxes. I did say we get back to AI. So tell me a little bit about, I, you know, you can come down on a lot of sides of AI. You can try to figure out
Yeah.
what's going to be a tool. It's going to really help. Is it going to be a replacement? Um, but there's so much that's not known about it, even just from a regulatory standpoint. I mean, do we use it? Who gets a commission? If you use it too much, you
Right.
use it too little, maybe it's a problem if you don't use it at all, that kind of thing.
What happens with the client data? Are there
Right.
there privacy implications to the data that we're feeding into the models? Who has access to it at what times? It's really
Right.
complicated.
And I
I'll
think,
tell you, well, go ahead.
no, you have.
I was gonna say, I tell you, our view, you said like, what are the future scenarios? Our view is, of course, it's human advisor enabled or powered by better tooling. And we think increasingly that tooling is going to be AI based. And it's
Yeah.
going to allow advisors to scale their impact, reduce, you've heard it time and time again, reduce the time that they spend or the money they spend on administrative tasks and then kind of the operation and kind of client meeting prep tasks and focus on seeing people and fighting to see people.
And not to make it too broad a point, but it's another reason to bring young people in. They tend to be a little
Yeah,
higher end
yeah,
with the tech stuff, right? And then you
yeah,
have the other challenge is as you have a workforce, a large workforce, like yours especially, and there's going to be haves and have-nots. There's going to be people who adapt and use it as a tool, and there'll be this
yeah,
separation. So if you don't use it at all, and you're not with a firm that has scale, it can maybe just keep tapping you on the head. Hey, you got to look over here.
yeah.
I think that's the challenge for advisors. There's going to be people who do it and move, and other people, it's going to be hard to catch up, if you don't
Yeah,
see.
and I'm not sure. Yeah, I'm not sure um how defensible an AI advantage will be 5 or 10 years from now, right? I think we're
Right.
all going to be using it. It's going to be somewhat ubiquitous in kind of all of our digital
But
interactions.
I think that it'll change by firm, right? So in other words, if some firms have a lot of it and they make it easy to use, and if when
Yeah,
guys are out in the field, you start making it difficult, and I have standalone RIA or this or that, or I have the opportunity to opt in, but I didn't, or I'll do it
yeah.
later. I think it's going so fast.
I think you're right. I guess what I'm thinking is if I if I think about the advisor client interaction
Yeah,
in 5 or 10 years, if you're not using AI to make sure you've got the right information at the right time to accelerate
yeah.
the meeting cycle with the client, I think you're going to be in trouble. And I don't know that we're going to see this change overnight, but I do think over the next 5 years, it's going to move, and we've got to
And
make sure we're educating our advisors and our industry on how to use it.
Yeah, and you also bring up clients, which is the clients are going to use it. So you got
Right.
to be prepared that they're going to be ahead, a step ahead.
OpenAI told me this, even though you're telling me something else. Why are you telling me something different than what this black
Right.
box large language model tells me?
Yeah.
You know?
Well, the thing with AI is it can only look backwards, right? And it tends to be
Yeah.
it's we had our CEO dinner and Jack Devine, who used to run the CIA, was there. You would have
Wow.
liked next year you got to come, you'll meet him.
Yeah, I love it.
Great guy. And he was talking about intelligence gathering and AI and how what's the unfortunately what you're seeing right now is everyone's using AI and algorithms to gather intelligence, but all it does is just gives you like the sum of all fears. It gives you the sum of what everybody
Yeah.
is thinking. It's
Yeah.
just gives you common knowledge. And he goes, if your intelligence means you got to actually know what might happen on the other
Right.
side. So you got to kind of got to be beware of the mass correct answer.
Right. Is there AI slop or soup out there that's gonna just
Yeah.
the sum of what people write on Reddit? So
Right.
maybe there's a real role for the advisor to help clients sift through what's real and what isn't. They're gonna have
Yeah.
all the information, or at least what's online, not necessarily accurate information. How does
Correct.
the advisor help them sort through, what's real and what isn't?
And AI can't look into private markets. That's the other thing.
Yeah.
So it can't look at, private credit or alternative investments. So that there might be an opportunity to add value by being well versed in
Yeah.
that stuff too. Yeah,
Yeah.
for
We're
sure.
thinking we're thinking of it as a capability that certainly can help with knowledge, but that accelerates tasks. So more
Yes.
like agents or agentic inside of a practice that can take away some of the more administrative work of preparing for a client meeting, generating or updating a plan, gathering client information, or even the purchase of a product.
Yeah, yeah. I think again, the guys who use it are going to excel,
Yeah.
and firms that are sort of there. So all that being said, believe it or not, we'll come into the end here. Where do you see, where do you see Northwestern and our industry in the next, 5 years?
Well, I think much like the rest of the industry at Northwestern, we're going through a sort of revolution where uh, the transition of ownership of some of the firms that have been with us for a long time is now moving to the next generation. I think this is a challenge for the industry as well. It's why we're seeing more financial buyers, private equity firms coming into industry providing capital to help with the transition of equity. And I think as that happens, we're going to see more consolidation in the industry. And at Northwestern Mutual, we're trying to find a path that limits some of that consolidation and allows more advisors to continue to be an advisor to their client, but also an owner of their firm.
Yeah.
And that means for us stepping up and using our balance sheet that was kind of built on our insurance business and leveraging that balance sheet to provide capital to the next generation of owners to be able to actually purchase these firms and own and operate themselves. We just committed $1 billion out of our general account to provide capital to G2s at what we think are, I'll just say, very favorable. Our accountants don't like me to say below market. I'll just say very
Sure.
favorable terms to give them the ability to kind of, if they want, own and run the firm rather than be forced down this road of consolidation and
Yeah.
perhaps loss of control and freedom and flexibility. It's been such a successful aspect of our industry the last couple of decades. How do we preserve that freedom and that control for the next generations of advisors in our industry?
Well, that's huge. By the way, I think we buried the lead. We should have talked about that too.
Yeah, yeah,
We'll have to do
yeah,
this again. But
yeah, for sure.
that's a high note. I think it's great. Building enterprise value is critical to advisors growth, and that's what they're seeing out there. So it's great to know that a big firm is thinking like that for them. So I think that's great, John. So
Awesome.
thanks for being here. Appreciate it.
Tony, thanks for having me. Thanks for all you do for our industry as well. Looking forward to our next conversation.
Great.